Hello and welcome to this channel where I talk about trading in the crypto market. I am going to show you guys how I enter these trades, what I look for before entering the trades, and most importantly, some of the rules that I never break.
Back again. I know I've been away for quite some time, but I've been very busy in these past few days, and so today we're just going to be talking about a quick little update, a quick little TA on where I see price going, and then we'll move from there. We'll go down time frames, sorry. It's a little laggy at the moment, but crazy price movement happening recently. Okay, so yeah, from here. Okay, so this here is actually still considered, this whole thing here is one big range. It's not moving much, but this spike and this down, loads and loads of price movement fighting retail, between retail and big institution. Okay, so now we want to see where we expect price to go, and to do that we need to keep on, so keep on narrowing it down. So from here, price broke in here. Wait, let me just mark. So price broke in here, went a little bit up and came back in. So now this is the entry point. So price here to here, right? And then price is still trading inside though. So we can see now in the smaller time frame how it's gonna look in the smaller one. So we can go 30 minute. See any difference? Because in the smaller time frame, maybe we could smaller it, like lessen it down. So here is lessen down. Ment box right there. But this also serves as one big demand zone. So yeah, I mean price broke out, broke back in. So now it's an even bigger. It's the same thing all the way down there. It's the same thing. Yeah. So from there we can actually also start here with something that you guys are more, because one of the big things about Ment box confirmation, based on experience, this is just my own personal philosophy, it's that the closer you are to price when you build that Ment box, I would feel like it's a lot better. But at the same time, it's a rule that you never break, that you always start with either the highest or you either start with the lowest, which is why we started with this zone here, because this is so far the lowest within this area. But then it's good to start near, and when you cut it, like if you let go of that, this is the next lowest. So from here, price broke out, price came back in. So we trade like that, just like that here. And then from here, price broke out, came back in and blew up. Exactly what's going to happen. So from here down here. So now here price broke out, but it faked and went back out. So that's, did it break? Yeah, it did. So it's not counted anymore. So now we gotta use, so when price broke out, came back in, it's not counted no more. So we just have to get, oh wait, let me move this out and get here to here. So far price broke out, it's gonna expect it to come back in. So now here is what you guys have all been waiting for. From here, we'll maybe expect some range here, then down. But then the thing is, this one, this price movement here, this one, wait, here, wait, right there, yeah. Let's make it thicker. Wait for this one. Price went up, down, up, down, up, down, up. So it's always been a bullish type of trend. But ever since price came down, it broke it, right? So basically what we're trying to see is that we are on the negative side at the moment. Negative meaning selling positions is what's going to happen right now. So based off of that, we know we have to sell, so we're going to wait for price to come out here and then go down, because they need to fill in. You see this way, wait, let me explain to you. Let me explain to you let me explain the whole institution style. From here, if you guys see this whole thing, let's consider it, let's call it A, point A. Okay, point A, this is A. Okay, point A. Now with point A, it's a classic, positive trend. And when it broke down, this is what you call caused by the big institutions. So let me add that. Right here. This is the big institutions, right? And that one is here. That's the big institutions, okay? This whole down sell, the down movement here, that's big institutions right there. So now the whole point of that is they got the whole liquidity, the whole thing in this up buy. This whole buy here, they got all the liquidity inside, and when they sold, they profited so much from it. But at the same time, by doing that, they left a huge liquidity zone up here because they sold huge by putting in their own money. So the whole concept of this is for it to trade range, come back in, and then sell lower. Because they need to come back in to at least mitigate half so that their positions are not very badly lost. But in the same time, by doing that, if there's another spike up, they are going to be leaving, let's say here, demand zones, or like maybe they reach somewhere here, there's another demand zone, because they always leave liquidity trails everywhere they go. That's the whole concept of whenever they trade with big cap or big positions, whatever you call it. We can tone it down a bit. Let's go down to the 5 minute. Let's just see. It's gonna be a big jump. And then based on that, actually wait, let's just clear everything out for now. Okay. Now based on this, it's completely different because from here, of course, some people might say, okay, there's a zone for support. Okay, and then we can look at some supplies here. There's already 5 minute is considered scalping already, by the way. So in this point in time, y'all gotta be very careful. This is another zone actually. This is one big selling point. Yeah, and then based on that, what we do is we also have to mark out. If you mark out supply, you gotta mark out demand. This is one demand that's holding. That's the strongest demand we are seeing right now. And then based on that, we can just what do you call? Wait, let's scroll to the side. Right here. Yeah, so from here, selling point. When did price break? Yeah, so selling point. Selling point. Wait, why does this look so off? I think there's something. Oh, here we go. I should have went a little more behind. This is so near. Yeah, we gotta go from here, boy. Wait, yeah. So from here, get this traded. Oh, see, this is why the Ment box is one of the most legendary trading confirmations. Let me explain. When price broke out this box, it's always expected to come back in, right? Because this is basically a huge jump of liquidity from big institutions. From here, came back down. Of course, your entry point, let's put a proper example. Entry point, stop right below 1.5, somewhere there. Okay, you wrote it out. So that would mean from here, your entry point, you wrote all the way here in profit. Imagine that. And then from there, you're like, okay, sure, what do I do next? This is the whole next box. But you gotta wait. The whole point of the trading is to be very patient. So you wait, boom, you're in the trade. Because that's when the price broke out here. right? Price broke out right here in this zone. Let me mark that out for you. Price broke out right there. Wait, oh shit, I can grab it. Fuck it. Okay, and then when price broke out, came back in to test, right? Came back into test because remember, big institutions, whenever they do huge liquid movement, they need to always come back in, test, to mitigate the positions that they did a while ago because they put in a lot of money and they need to come back and fill it back up. They need to get their money back, otherwise, because so far they've been losing because they had to go against the market. They made money, don't get me wrong, but of course the whole point is to cut losses, cut all that. So once you do that, you come down here. You're in the trade, you're in. I'm just showing you a walkthrough example of how I would do things. This is too big of a stop loss in my opinion. So what I would do is I would do half, but then I would have another entry right here. Just so that I could, enter the better position and get out. And then, so you're trading, boom, you got all the way, you failed 1.5, just like that. 1.5. Remember, you're scalp trading in the first place, so yes, it is more risky. Yes, I go in with a smaller position, but scalping, to me, I go a little bit higher left than I would usually. Of course, swing trading is something every day you're in a trade, but in scalp, you can do multiple trades in one day, which is considered greedy for some people, but I think if you know how to do it right, it's always going to be profitable. If you just stick to one bias, like I always say. Yeah, and then just like that, then this is a break of structure right here. Right, because price broke out, but at the same time when it came back in, it didn't come out yet. It broke down straight. This is break of structure. So what that would mean is you need to look for a completely new box and all-time high. So you maybe now you're gonna have to start from up top, up here, anywhere you would like, and then trade. But the whole point is, if you get the one box right and you keep trading the same way, profits are going to be unimaginable, but of course, at the same time, you are going to hit losses because it's inevitable at the same time. So that was it. Actually, that's all I have for today. And I hope you guys enjoyed. Don't forget to like and subscribe. And I'll see you guys in the next one.